How can you go 2 months without making a mortgage payment when refinancing? Let me explain to you. It requires you to understand three terms: mortgage paid in arrears, prepaid interest, and unpaid interest. So let's go through those three terms. First one, mortgage paid in arrears. What that means is that when you make your mortgage payment, you're actually paying in the opposite of an advance. You're paying in arrears. So when you make your July mortgage payment, you're paying for the month of June. This is the opposite of paying rent. So let's just put that here, the opposite of paying rent. Usually when you pay rent, let's say you make your June rent payment, you're paying for the month of June that you live in that property. So it's the opposite. When you make the July payment, you're paying for the month of June. Prepaid interest. So when you close your refinance, there's going to be prepaid interest. Prepaid interest can sometimes be negative, and that, well, you'll understand why that is. But for the sake of this loan, let's just say the prepaid interest is 15 days. So let's say you close your loan on June 15th. Okay, your first payment on the new loan is when? August 1st, if you've been paying attention to the first one, because you pay your month of July on August 1st. Mortgage is paid in arrears. So you're going to pay the month of July on August 1st. Well, what about June 15th to June 30th? What happens there? Well, at the closing of the refinance, you will pay the 15 days of prepaid interest. So this is a prepaid item shown up on section F. It's not a fee. Basically, you're just prepaying interest that you owe. Every day you have a mortgage, you owe somebody interest. Then the last term, unpaid interest. So if you owe your current lender, you owe them your unpaid principal balance plus your unpaid interest. So let's say the loan's going to close on June 15th. Well, let's say you've made your June payment, which covers the month of May, but you have yet to make your July payment. Okay, so now you're going to owe 15 days of interest. And the way you can go 2 months without a mortgage payment is, let's say you put the loan to close on June 10th, but you don't make your June payment. So now your last payment was in May, okay, and then you don't make your June payment, and the next payment on the new loan isn't going to be until August. So you effectively would have gone June and July without a mortgage payment. But you're not skipping any interest because you'll owe the unpaid interest on your um, on your payoff demand. So it'll be the unpaid principal balance plus the unpaid interest. If you haven't paid June yet, then it'll be May 1st all the way, let's say, to June 10th or June 15th, whatever the closing date is. And you'll have those 45 days of unpaid interest, which you may be able to roll into the loan. So you end up, in effect, getting some cash back as a result of the refinance. So those are the terms you need to know and understand how you go 2 months without a mortgage payment.